You're tuned into the It's Real podcast with your hosts, Kayla Calendar and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
Welcome to episode 70 of the It's Real podcast. I'm Kayla Calendar and I'm a mortgage lender.
I'm Andrew Yagi. I'm a real estate agent. Happy first week of March, Kayla.
Yay, we did it. It actually feels like spring. Spring has sprung, finally.
It does. I feel like we're probably not out of the woods yet, but yeah, it's just amazing how great it feels. And actually expressed as well in the motives and the actions of home sellers and buyers.
Yeah, I feel like it just heats up a little bit and the weather and people come out of the woodwork personally. I feel like it, but I mean, no one wants to look at homes when it's 25 below zero and you can't, get through the snow on the sidewalk to get to the house. So I think it's heating up in all sorts of avenues here.
Absolutely.
Mm-hmm.
What do you know this week?
Man, this week, busy week last week, busy week this week. People are wanting to chat. People are wanting to talk home buying. It's been, I don't know, I feel like this time of year, it's like the galas happen too. It's like a couple times a year and there's just new energy and excitement. And I'm seeing a lot of people wanting to talk about building new homes because, this is the time when, we can actually maybe get in the ground soon. So I've just seen a whole level of energy in terms of just conversations and excitement, I feel like, in Fargo-Moorhead.
Mm-hmm. No, that's really awesome. Do you have all of your gala dresses picked out? Or are you going to be wearing something like Whoopi Goldberg did?
What did Whoopi wear? I don't even know. I don't even pay attention.
Oh, she had all.
Whoopi.
I'll show you an image.
Oh,
so kind of a very elaborate.
Yeah. No, I prefer more the form fitting versus the looking like a dinosaur, but but no gala dresses selected yet.
No, gotcha.
What's new with you, Andy? What's going on this week with you?
What is new? Well, I'm trying to pack about 2 days worth of work or a week's worth of work into about 2 days. We're actually taking off, going to take our girls to a quick trip to Mexico. So we're going to kind of jet off Wednesday morning, be gone through Sunday.
Fun.
So it'll be good to get away. Although, I'm kind of wishing we would have gone when it was 20 below and not, when the weather's really nice. But no, it'll be good. I need some time to recharge. It's been, somewhat of a challenging year. Just, I look at all of the different things that I have going on, irons in the fire, and just, the people aspect and just, a lot of different things. There are, it seems that there are increasing challenges in life, Kayla. And
Always.
So I'm really looking forward to getting away and kind of getting some much needed rest and rejuvenation.
R&R. Remember though, get your stuff done so that you don't stress lax, because so many people go on vacation without getting things done and they try to relax and then they're stressing out. So I hope you can delegate to elevate, get all your stuff off your plate and enjoy it with family. Because where are you going to be at in Mexico? Like Cancun-ish area?
Cancun. Yep, we're actually going to go to Cancun. We haven't been in Cancun for quite a number of years, but go to Puerto Vallarta maybe a little bit more often. But no, it'll be kind of nice. And hopefully this won't be me on.
That'll totally be you.
It might be to some degree. One thing that I said earlier this year, and it's tough, and I can appreciate like one of the Snapchats you sent the other night, just talking about the number of hours you have to work and the effort and energy putting into this profession for the benefit of your clients.
Yeah,
it is really challenging to get away. And I told myself earlier this year I was really going to work on systems and having just the ideal team in place, so I could avoid and even like hypothetically leave my phone at home and know it's taken care of. And unfortunately I didn't quite get there, just with personnel and some other issues, which is totally fine. Life is and even our career, it's about constant improvement and working towards that goal. But one day, Kayla, I'm going to be there.
One day you will. It's hard though, Andy. It's hard to get there. I mean, especially like it's been a tough industry to be in, especially the last few years. And And, it's not hard, in my opinion, to, set yourself apart from your competitor, because as you and I have talked about, like, there is this level of mediocrity that people choose, and that's okay. Again, that's you. That's completely fine. But it's like, you want to stand out. You have this passion, you have this care, you want people to have an amazing experience. You want them to trust you. And we all know that the market's been hard. Like, there's people that have left the business, people that are making a lot less money. It's less houses, less from the consumer. And so when you have the opportunity to help somebody, and fulfill your, what your soul needs to help them, but also to pay your bills and to, have a really good income and provide for your family, it's hard to just put everything down and say, oh, well, I'll help them later, when they could go across the street to the competition too. So it's a delicate balance.
Yeah, you're absolutely right. I was actually visiting with my real estate coach, Paul, about this as we were just kind of talking about, just challenges, just with people in general and with the workforce, but then also in real estate. And, he said, prior to COVID, it wasn't as big of an issue where there were so many, what I'll call less than part-time agents out there. But then COVID happened, and everybody wanted to get a real estate license. And
Yeah.
even, I've been trying to chase down an agent since the middle of last week for feedback on a couple of my listings, and finally got a response back yesterday. Oh, sorry, I'm fishing in Canada. Yeah, they didn't like them, and this individual sold no homes last year. And
Yeah.
so one of the statistics, and it's like I feel for an individual like that and the potential clients out there, that they're just not being served well.
Right. And I think too, it's just that it's our job to educate people too. And I think now more than ever, I mean, people are getting smarter too, with the access to YouTube and social media. And it's not just like you just trust your local bank or who your parents used. It's more than that. And people are getting more, a little more intelligent with searching people online. But sometimes it's hard to find out how many houses Andrew Yagi sold or how many loans has Kayla Calendar funded. And to that extent is, in Fargo, we have those special assessments. So when clients are using someone not local, it's a concern, because it's just a different market, and clients don't know how to shop that out or look for that unless you have the tools or a lender showing you. But yeah, I think they're getting smarter, but I think it goes back to what we always talk about. It's like experience matters and expertise matters, and you deserve to have the best team. And how do you do that? How do you set yourself apart without kind of burning out a little bit?
Well, I'll tell you how you do it, Kayla, and something I've been studying every day, and that's AI a little bit, I think.
Yeah.
I think that, obviously AI is a little bit of a mixed bag. And, I
Yeah.
look at like our parents' generation and grandparents' generation, don't particularly love technology and get a little bit freaked out by it. But one thing that I've been trying to do is start my day learning a little bit about AI, just because I think it certainly will replace some people, but I think it's also going to help people work a lot smarter, and not work so hard. Even like when we're posting our podcasts and when we're going live, using AI to basically look at what have we talked about,
Yeah.
and put together kind of some compelling scripting.
Mhm.
This article that you had sent me, Kayla, about the first ever AI real estate agent generating 100 million in sales in Portugal. And actually, with some of the systems that we use, we're using AI in that context as well, where it's basically working to kind of vet potential leads and people that are looking online in order to kind of see, hey, is this somebody who really is serious about buying? Where are they at in the process? At which point, a live individual takes over and they get it done.
Well, and I think too is like people get so, I guess I'm going to say it, bent out of shape about AI and technology. Even if we're not really looking, to do that. Like, I'm not to looking for AI to replace Kayla or AI to do these things for me, but I'm looking at it at a sense of, Dave Savage is a big mortgage, I guess, thought leader in my world, but he always says technology will not replace loan officers. Loan officers with technology will replace loan officers. And that just goes to say, like, it's not replacing your necessary like contact with clients or your ability to do approvals, but it's offsetting things that are manual tasks. It's the ability, we can pull up, it's called Guideline Guru. I can ask it a question and it can say, like, this last Friday night, we were working on a VA loan, and can we go up to $3 million in a VA loan? Like, just asking these questions, and it spits out all these tools. It's not that we're relying on that. yes, we ask the underwriter, yes, we do these things, but it's the ability to have resources and tools to allow you to, again, I say it all the time, delegate to elevate. It could be like mundane tasks. It can be something as simple, like I use it, Andy, for my LinkedIn, Instagram, and Facebook, when I'm like, okay, how do I correlate owning 4 dogs and owning a home? Like, I'm just giving that as kind of a silly example, but there's so many ways to just get your like brain going on there too. Or when we do our webinar, Andy, I've used it to say, give me 5 top tips for, those wanting to learn more about mortgage and real estate. It's like, it just gets the flow going too. But
Yeah.
I love where you're going with it. It's people are
Well,
using it.
again, I think it's all, you have to embrace technology. And like I always tell like clients that I work with, like when we list a home, we have a heavy marketing strategy with video, highlighting their
We
home,
do.
because it makes sense, it gets results. And it's just another great way to showcase
Mm-hmm.
most people's largest assets.
Yep.
And so, even when we're working with that, I mean, there are some really great AI tools that we can use behind the scenes, both to follow up with those leads, who are looking at those listings and giving us their information, but then also, putting out some of the information or even helping us refine a script.
Mm-hmm.
And it's something that can be done, so much quicker using AI than, having to rely on a copywriter or something like that as
Right.
well.
Right. I think it's too, like I talk about Plod. I think I sent that to you, PLAUD, AI voice recording. Like when
Yeah.
you're at a conference, did you order it?
Yep, I've used it a couple of times.
What do you think?
I think it's neat. I really haven't gone into
Neat.
the app and dug very deep yet, but it's on my AI to-do
Neat.
list.
I love it. Well, I went to a conference last July and my buddy Ken used it for every speaker, and then he could, send it to me like, hey, then don't take notes, be more present. And I loved it for that. It's like, this is awesome. So it's powerful.
Mm-hmm. Absolutely.
I love
Well,
that.
speaking of powerful, Kayla, there are some interesting things going on out in the world that could affect housing and mortgage. The first of which is supposedly tomorrow, or maybe it'll be today. We'll just say March 4th, depending on when you're watching this. Just the fact that tariffs on Canada and Mexico may go into effect on the 4th. There was a 30-day, Trump, threatened tariffs, and then there was a 30-day reprieve from it, but then signaled again that more than likely it is going to happen. And so, what does that mean? Consumers now think inflation will climb to 6% in the year ahead, up from 5.2% in January. What do you think about that?
I'm just so on the fence about even like what I think about it, because I just think with Trump in office, you just don't know. And this isn't like Trump 4 years ago or multiple 8 years ago. Like, I feel like he's coming in strong. He's coming in hot. And I really don't know how this will impact anything else, because I don't fully understand exactly where with the tariffs, how this will impact housing. I really just have I'm just on the fence of where this will go. I mean, we know that certain things are going to cost more money. I had a client that they lost their job. They work up at the border of Canada and they lost their job due to some of this. I don't know if this is a temporary thing that we'll see like rebounds of jobs, but for me, I've seen, like I said, I've seen a client lose a job over it. So I don't know what that will lead to in terms of housing though. It's tough to say. It's Trump. Who knows, right? Like, what are your thoughts?
Well, I don't know either. I mean, I don't know. I'm trying to stay off of social media and stay calm, cool, and collected. It's just amazing at how many different ways people are looking at different things that have been happening politically and otherwise, and just how there are so many different conclusions that can be drawn from
Yeah.
the event. I kind of have taken the approach that, hey, well, I'll believe it when I see it, and we're
Right.
just going to have to roll with the punches. I do think there likely will be some pain, and even like for the client you talked about, no faults of their own, they were let go or temporarily released or whatever it was. I know some other individuals that have been using some programs like through the Department of Ag to build a new grain dryer, that all of a sudden the funds are frozen. And so
Yeah.
I think there's going to be some pain and some unintended consequences, Kayla.
Yeah.
But I think we'll get there. This article does go on to say, that while the promise could be part of Trump's negotiating strategy, home builders could soon be paying 40% duties on Canadian wood. And that could be.
Yeah, whether it's steel or aluminum imports, or I mean, any type of housing, material and costs, I assume that might go up. We see those costs typically go up anyway. So I think about new construction. So that's kind of where my mind goes. I think that this could impact the costs, and let this be then maybe a reason that, I tell people, don't just build or buy to buy, but would you rather be paying right now the cost, or do you want to wait a year, and is it going to be more in a year? So I'm just more curious about what's going to happen with new construction.
Yeah. Okay, well, we could talk about hypotheticals all day long, but I know you've got a bit of a tight schedule today, and so I want to keep us on track. So what have rates been up to since we last talked?
Yeah, they've snuck down a little bit. Gosh, I locked somebody last week. Like, we're seeing, USDA rates. I think I mentioned I locked someone at 6%. And as you can see on a 30-year fixed, 6.74. Remember when we were seeing like high sevens at one point, Andy? I mean, rates have come down a bit. They've been performing. Now, there are still those bond programs still in the fives. You are still able to get down payment assistance. There's so many options. Even right now, a lot of companies, a lot of banks, like as you can see, North Dakota Housing here, 5.45. If you're a first-time buyer, if you're under certain income limits, up to 5.95. Like, that's amazing. We're under 6 for the most part. Now, for repeat buyers again, or those with higher incomes, you're going to see a little bit higher rate. But even right now, we're offering at the bank, and there's some other companies that are too, we're offering a promo right now of 5.375, 30-year fixed. That's not an assistance program, but you have to be within certain income limits. So there's been a lot of attractive opportunities for people. Sure. And what I always tell people is have the conversation. You just can't just call and be like, what's the rate? Because it depends on the program, the type, the debt to income. And you might qualify for some of these really cool programs. So, but 6.74 is a national 30-year fix. So I'm excited about that. I don't know what we will see in the future. Again, you just never know with what's happening. But, with Trump, a lot of people are like, well, will rates go down? We don't know. I don't have that crystal ball, but I'm pretty happy with that 6.74.
Sure. Well, I know that one of the concerns out there, just looking at some of the other news out there, talking about DOGE and their move could destabilize the mortgage finance system. And, what they're talking about here, Kayla, is mass layoffs, again, in program cutbacks at the Department of Housing and Urban Development. FHA and Ginnie Mae are being undertaken without analyzing how they could impact things. So just kind of talking about the fact that, if they are laying off quite a number of these individuals, it's going to reduce staffing and could lead, to higher costs, or less service. So there could be some challenges, it looks like, with some of the national or subsidized loan programs out there by the government. Have you been hearing any rumblings about that?
I haven't heard a ton. Like, it's kind of like the go on social media and hear the worst, or open up, the mass media on your TV and you hear the worst. Locally in Fargo, North Dakota, or out in Minnesota, we have not heard anything. If anything, we've heard the opposite. So it's kind of like you said earlier, it's like until, it actually comes to fruition, it's business as usual. So I haven't heard any rumblings, but if anything, the opposite, more opportunity.
Sure, absolutely. Well, speaking of opportunity, let's take the opportunity to talk about kind of some housing numbers, since we just put February in the books. We kind of have some numbers to look at. So this is a summary of the Fargo market for February of 2025, and obviously it gives us a one-year history. Number of listings in Fargo is up just a little bit. List price is way up, Kayla, and I'm actually going to jump down. The average list price, this year is about $503,000, up from $446,000. That's up 12%. Part of me feels like a big part of that has to do with, the number of new homes that are out there that are listed that maybe aren't hitting the market, that are out there, just as I'm especially getting emails from home builders about every other day, like, hey, we have these great incentives, come buy from us. It seems like there's a lot of new inventory, a lot more than there usually is.
Yeah. And I think too is there could be, builders even around here, they might be sitting on inventory. They need to move that. I mean, they're paying the taxes, the specials on these. I've had a lot of builders even discuss the 2-1 buy down. you know that is your rate is lower the first year by 2%, 1% the second year. I mean, that's amazing for clients. And if we can get people into homes and save them that much up front, a lot of builders are paying for that product for clients to get into. So to me, that kind of tells us that, yeah, maybe builders are sitting on some inventory that they need to move.
Mm-hmm. Yeah, for sure. Looking at the absorption rate, it's just up at about 7%, but from about 2.7 to 2.86 months of homes on the market. Sold to list ratio to me is kind of interesting, Kayla, that it's really kind of plummeted, coming back a little bit, but people, it looks like, are getting some better deals on homes. Days on market's been up a little bit. Homes are sitting a little bit longer, and price volume overall is a little bit volatile. The sold sale volume is down over the same time last year, so not as many home sales. New list volume is down as well. Active volume is up just a little bit. So in the Fergus Falls market, my more immediate market, we're sitting with slightly more listings. Again, keeping in mind we never get much for new construction. List prices generally are up. Absorption rate, we have more homes for sale than usual, about 2 months versus
Nice.
a month and a half. Sold to list ratio, again, people are getting some fair deals, about 94 to 96% of list price. Homes are sitting at about the same amount of days on market as they are the same time last year. And price volume is up overall a little bit as well. New list volume may be down, so not as many homes hitting the market, or dollar wise, and sold sales volume is down a little bit as well. So a hair slower.
Are you seeing seller concessions lately? Seller paid closing costs? I'm seeing a lot. I've had almost every transaction. I'm seeing some type of incentive. But that's awesome, because we saw days where that was not a thing. 2020, 21, what is a seller concession? I felt like I had to train my team, and we had to retrain realtors again of like, how much can I get FHA? How much can I get conventional? Because we weren't seeing it. But I'm seeing it continuously. So I guess with that being said, it's still a great time to buy, because if you're getting that much money, $6,000, $7,000, $8,000 from the seller, I mean, that sounds pretty wonderful to me.
Yeah, I think it is. And again, I think it's just a sign of the market that, hey, people are willing to ask, and again, sellers are willing to grant said concessions. I was looking as well, Kayla, and I was just kind of analyzing the stats a little bit, kind of looking at the sold sales volume. And just the fact that, like right here, it looked like just shy of $4 million in sold sales volume, versus here is maybe like 2 million. If I look at the Fargo numbers, sold sale volume, was probably at 25, 27. Now about that 20, kind of coincides with this other article from Inman talking about new home sales plunging 10.5% and fall below expectations. So just really talking about consumer sentiment. And I know we've talked about it a little bit last time, but just how sentiment's been a little bit lower, and that's really reflected in the number of home sales. And probably, I'd like to know your ratio, the number of pre-approval letters written to the number of actual offers made to the actual number of properties under contract.
I haven't done my Monday numbers yet, but I can tell you in the I guess month that I've been back at First International, I believe, I'd have to double check, but I think I had like 35 people apply. So, I mean, that's a good amount of people. And I would tell you, we probably have maybe 12 of those people that are in contract or about to be, maybe 10. I'd have to do my numbers, but I mean, we're seeing a traditional conversion rate from lead. So any opportunity you get. So, hey, Kayla, someone's interested, to actually getting in contract traditionally for loan officers is about 20%. So when you think about that, I mean, that's a lot of time and energy spent with people and training and coaching and credit pulls and verifications of employment and all these things for us to turn over 80% of people might not buy. And when, consumer confidence is low, I mean, we really need to pour into our people and really empower them and show with them the opportunity. But I mean, on average, I'd say we've converted probably about 25% of our people, maybe.
Sure.
Yeah.
I fear, you know, in a market like this, and I'm reading just on, you know, some Minnesota State like realtor broker forum through the Minnesota Realtors Association, just talking about how people are getting frustrated with people just looking to look, and even like Zillow now, because they own Showing Time, the showing platform. Zillow automatically will set up showings for leads when they request them, and they'll pass them to one of their partner agents. They have no idea who they are. They haven't qualified them. They've signed hypothetically a showing agreement to go look at a home. But just the
Mhm.
fact that you know, we've really slowed down our process in working with buyers, and that we're generally working only with very serious
Right.
buyers. We're not tour guides. We're making sure that they're ready to go, that they're educated. We want to make the process good and positive. We don't just want to go open doors, and you know, and that
Agreed.
includes getting you lined up with a good lender like Kayla, or someone else, just that provide a great education, because it's otherwise it's a frustrating experience.
Yeah. And I think too, it's like, I mean, have a talk with someone, but I always say prescription without diagnosis is malpractice. You're probably sick of me saying that. But again, it's just, taking the time, doing your due diligence. And then if you're serious, then go forward, because it can be exhausting for someone if they're not interested. You know what I mean? If they're not serious and then they get to a house, they want to make an offer, it's exhausting for everyone, and I'm not telling people not to apply or go look at homes, but it's like, this is a serious purchase. This is a serious time. And I love that you work with those serious buyers, Andy, because you're not a tour guide. And if you were doing that, you would be taking the time away from the people that were extremely interested and serious.
Right on.
Mm-hmm.
Super serious, Kayla. Well,
Super serious.
great. Well, great chat. It was good kind of recapping last month's numbers. I'm going to be really excited to kind of see, you know, where things go in March, and see
Yeah.
how much the market heats up. And I've got pretty high hopes. I think it's going to be a great year, Kayla, but it's
I
all
do
about,
too.
kind of what you put into it. And I'm really excited to help our buyer and seller clients reach their real estate goals.
Likewise. It'll be an interesting March and I'm excited for it. I'm ready for it. So
Well, Kayla, hit the ground running. March Madness. Have a great week. Great connecting with you. And go out and enjoy this beautiful day.
I will if you will. All
See ya.
right. Bye, Andy.